professionalinvestor.com's daily brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello again, everyone. Welcome back to the Frivolity. Hope you're enjoying our nice little intro piece there. Chris worked so hard on all that. It's probably a little bit of a learning curve that we have to go through, a comfortability curve, but actually I'm pretty impressed with this team. I was going through the website today and I noticed that this blog, I tell you, man, this is more valuable than any Wall Street research out there. This is so freaking cool. I got to try and refrain from swearing. I don't know why we can't get through to the YouTube audience, like the real. Well, that's not right. The real is not that. It's just I'm not in tune with the YouTube cycle thing. Because, man, if we could somehow get this message out to the world, I mean, the work that Josh is doing here is just absolute poetry. And hopefully he's learning a little bit along the way. I mean, this is incredible, the work that he's done here. I mean, frankly speaking, I didn't expect this video to start like this, but Chris told me, oh, by the way, Josh updated the blog with this cycles thing that you've been wanting to talk about for a while. And I mean, honestly, folks, you're not going to get any better research than this. This is just incredible. And actually, the person that was asking on the Broiler Chicken show this past weekend, talk a little bit more cycles, I made direct reference to this image. I mean, it is just so next level. And you're just not going to find this anywhere. Wall Street, Bay Street, Howe Street, what the hell's the Hyde Street, I think is the street in London. You are not going to find this anywhere. It's just absolutely incredible. And I don't know how I make a better sales pitch for this, but geez, and it's free. It's free. I can't believe this. So way to go, Josh. Everybody, I think Josh is over there. There he is. Yeah. Asking everybody to smash the like button, hit the subscribe, and, come and get this free research that TRI provides you. And this will change the entire way that you look at the whole capitalist system and the machine. It's remarkable. Anyway, so there's an interesting intro for you today. Don't really want to show you guys on a daily basis the breadth indicator. I've had a few people tell me that, Brian, if you're going to sell this as a subscription service, it's working pretty darn well. I just give you like a quick sneak peek at some of the signals. Just like I said, I don't really want to go into this too much, but last DI signal, huge buy signal, I missed it. And then nice sell signal from the algo, and of course look what Bitcoin's doing right here. So geez, I mean, the algos, the products, the TRI team that we've put together here, these people are extremely intelligent, and they're building and interestingly enough, right, it would be fascinating if we can actually couple the artificial intelligence side with Sjord's algos. And I suppose that's for projects down the road, but man, next level stuff, I'll tell you that much, by crackers. Anyway, just looking at the broader market, I've been having some really weird sleeps lately. If anything, maybe this is a good thing, because maybe Brian can just slowly fade off into the background. I said I wanted to take a couple of weeks off here. Sjord right now is on vacation, so I don't really want to talk a little bit about any updates or anything to the website. And we missed Sjord yesterday. In fact, had a lot of people kind of go, where the heck's Sjord? It's Tuesday. Where the hell is he? Yeah, but we all get to take a bit of a break every once in a while. So he's out doing the country farm thing with his family in the Netherlands, which is just adorable. I think I want to take a break here for a week or so in the not too distant future. And just FYI, we are probably going to be retooling how we do all these videos and stuff like that, because YouTube clearly doesn't like me. And we're pouring a lot of time and a lot of effort into these videos, and going this route, it's not quite working. So we're gonna have to figure out a new approach. Maybe some suggestions from you guys as to what would be a better approach to these videos, because I like doing them, but at the same time too, they take a lot of time and they take a lot of effort, and they're also taking a lot of capital too. So anyway, food for thought. We will be sort of restructuring stuff down the road. But the irony of it all is that the actual research that we do here at TRI is really awesome. So next level. Anyway, so today was kind of a weird day for me. Like I said, I've been having some really hard times in bed in the evenings, and it's showing. Actually, I've been so sleep deprived of late that literally I finished the videos yesterday, and then literally I just went right back to bed to try and get some half decent sleep. You can see I've just haven't been doing very well lately. And the only way that you actually see this and you can sort of track this, and it might even be a good idea to put myself on some sort of sleep tracking program to get myself somewhat online. The problem is I've got like literally long-term COVID sickness shit. My feet have some sort of rash or something that just won't go away. My shoulder, I've talked to you guys about this since I got these vaccinations. I have just an unrelenting pain in my shoulder. I do the exercises and crap every day, but it's just not going away. So the old man, his body's kind of falling apart here, which is a shame. Anyway, that's my problem. But the point here is I'm trying to demonstrate to you guys sort of best practices. I think it is a good idea to track, first off, how's your computer equipment working? I've been noticing recently, and actually I did see it on a couple other people. We had somebody on, we had our stock pickers club last night, and I noticed their trading view when they were loading up symbols last night. It was very, very slow. So it's not just me. There's something going on with trading view. Diet and exercise. Oh, geez. Diet's okay. Exercise, like I said, I'm just riddled with body pain right now. And of course, my sleep schedule. I talked to you about that. So, was up actually very early this morning. The interesting thing is I think actually they laid a bit of a trap in the crude oil market here this morning. I didn't actually take the trade. And I guess the primary reason why I didn't take this trade, it just didn't feel comfortable about going short. The opening range trade this morning in crude did spit up a short signal, but I just did not feel comfortable about it at all. That was down here. I guess the major problem, and I think what I'm probably going to do is incorporate this into sort of my approach to this opening trade. There is sort of, this is a 1 minute chart. In fact, I like to do like a 10-second chart so I can see, that 1 minute broken down. And they often do this in the crude pit, so it doesn't really surprise me. There was that opening 1 minute. And this was a really weird sort of, they like literally ticked it down. So there is 601, right? And then they ticked it down and then just took it straight line up. And I don't really like to take these trades if they just tick it down. Actually, I watched Chris and I don't know whether Josh, I think Josh is actually building an algorithm on MT4 to actually trade this, which is pretty darn impressive unto itself. A different Josh. Got all these awesome Joshes around. They're so cool. Something about the DNA when people get joshed when they're born. Anyway, so the reason why I didn't feel comfortable about taking this short, and I didn't take it, I missed the trade, was what I like to, first thing when I wake up in the morning, is look at where we are. And that was basically right here. Right at a fog and bomb, whole chaos theory. This was also a key support level right here. So this is actually a long trade location. As well too, we have the ATR script. Really, markets don't like to go outside of ATR here. Quite often what'll end up happening is these work as really, really good pivots. So we were right down on the lows first thing, and you can see, look what they did, right? There's 6 a.m. They opened up the damn market. This is a 4-hour chart. So, this candle starts at 3 and ends at 7 a.m. my time. So 6 a.m. the price was right down there, right on the lows, and then they just took it straight line up. So I really didn't feel comfortable about going short there. So, but having said that, we do record the data. I was willing to go back and go in on that trade if the market did want to tick down through this low. So the market ticked through the low, it jumped back up, and then I was like, all right, I'll place a sell on stop. If we do go down through those lows, then great, I'll go short. But it felt like a trap, and sure enough, it was a trap. Poor old Chris, I think he got busted out on this. I don't know. Did you do the gold one as well this morning, Chris?
Nope, gold was out of the ORT
All
parameters,
right.
so in range, in value.
All right. So it was just one of them today, and it was a big nothing burger. Boo. But that's a trader's life. Sometimes I've showed you, sometimes these opening range trades are just monsters. Anyway, also too, I don't know whether I'm really comfortable with 2 contracts greater than about 20 ticks risk. That's 56 ticks. That's a lot of risk. So anyway, long and short of it here, I did not take that trade, but at least recording it and journaling it and all that kind of stuff. So there is that reference to crude. So I kind of got laser beamed on crude. And the worst part about crude this morning is the damn market just like literally, like I showed you, just launched straight up off of those lows. So we actually rallied into yesterday's lows. Basically we only take the opening range trade if the market is below previous session or below or above the previous session's range, and there was actually the previous session's low. So as we just launched straight up, and as we were launching up into this level, I started to go into stalking mode. I don't know whether it shows on here. This is 10-second, but if we look at like the 1-minute chart, started to get signs of divergence developing as we were coming into these levels. You can see the divs, you can see Willie Stupid. This is basically a setup that I teach in the education program, the El Tango Dater. This happens to be day trading purposes, and you can see it took me a couple shots to actually get a half decent trade off. But on balance, good part about this is, I have a rule: 3 strikes and you're out. Linda Bradford Ratchke would say 2 strikes, but we saw this actually very, very well-defined double top come in here, and I was able to hit that inside bar level, and I took the market for a couple contracts, about 70, 80 ticks on that. So on balance, the day trading was profitable today, but a bit of a slog. And after I got stopped out on my remaining position here on this, I just moved my stop to just above these highs, and I got stopped out there. I was just like, I'm having such terrible sleeps and just not in the best frame of mind. So I went back to bed, and I just got up about 20 minutes, half an hour ago to get ready for the video for you here today. So full disclosure, that's my morning so far. I didn't have huge econs come out today. The scuttlebutt sort of is, of course, they're still wrangling about, well, is this debt ceiling debate? Now it goes to Congress, and now, of course, all the people in Congress, this is their moment to shine. And so they're going to be like, oh, you're going to screw our kids' future, which, of course, the banksters do. And the banksters don't give a crap. In fact, I wouldn't even be surprised if one day one of these banksters goes, yeah, that's our job, is to screw your kids. You're supposed to be our slaves. And how do we get you into financial slavery unless we completely screw you over? I don't know. Maybe that's why YouTube doesn't like me. I don't know. Anyway, that's the truth. Watch the Money Masters videos. Might as well play this game with open eyes. Anyway, econs and news today. The econs, we had some chunky numbers. Of course, the Europeans are still dealing with very, very high inflation rates. The North American numbers are starting to come down, and even the German numbers are starting to slowly come down. Probably in the pigs nations, it's going to be pretty ugly. And in the Northern European nations where they're a little bit more austere, you're probably going to see their inflation rates come down a little bit faster. I think a little bit of a surprise to the market was to see that Canadian GDP wasn't nearly as bad as what people were thinking. Is this today's data? Yeah. So the GDP number for Canada was actually a little bit better than expected, which probably means that the Canadians are going to raise their interest rates. They really should. One of the warnings that I had given recently was if you see that the Americans continue to raise their rates, but the Canadians don't, you might see the Canadian currency really collapse. But the scuttlebutt now is that since the data is coming in, that Canada's GDP is coming in stronger than expected. And I still don't think that I can't really comment on Canada. Canada is a weird place. The economics are just batshit crazy here. And of course, don't get Brian started on substitute drama teachers and Klaus and all that crap. But I definitely don't think that there's going to be a really bad recession in the US. I really just don't. The economy is just way too strong. So, as the US's little cousin, and really probably Mexico, the data is probably even better. North America, that Peter Zahn guy, if you ever watch any of his videos, and this, interesting enough, basically corresponds with my greed fear cycles and really the United States and North America economy. Now it's their time to shine for the next 10, 15 years or so. So I suppose things aren't so bad in Canada, but those Canadian banks. Well, we were actually, just to give you an idea, this is kind of a fun illustration for you. All right, so and actually, the best way to do this is to go, and I don't know whether I have enough time. I probably shouldn't do this on the free video. But PacWest, that's a good example. This is a U.S. bank that's a regional bank that's in a little bit of trouble. And so what you can do on a site like FinViz is you can actually sort all the regional banks, and you can actually go in and sort them by things like book value, which sort of gives you an idea of like how expensive or how rich a stock is in the marketplace. Most people don't do this, but it's actually a very handy way to look at the market. So here is all the U.S. regional banks. There's 346. Here is the price to book value right here. Ideally, especially when it comes to a bank, you want to trading at a round book. But what are troubled banks? Well, look at these numbers, right? So this HDFC Bank, it's trading at almost 4 times book. Oh boy. IBN, and you just go through all the list. These are the banks that could potentially be in trouble. Actually, I was trying to find one or two that we've been talking about recently. But the point being that this is sort of a tell that, these banks are pretty darn expensive. And then also too, we want to look at the relative debt ratios. So you can also come in here and do just an overall debt screen. And you'll notice, let's see, long-term debt, here we are, or even just debt to equity. You can also screen here. And this is where I think this is the metric I was thinking about. Like that SVB and all the other, regional banks that were in trouble recently, right? They got horrendous debt ratios. Zach and I run a fun little screener, and we don't want to consider a name unless if it has more than 0.3 debt to equity. So these guys are like 5 times debt to equity. Oh boy. Banco Centero Chile. And actually, we looked at a whole bunch of South American banks, and these South American banks look pretty sketchy. So Banco, Lithamerico, do as Comicio, Exter, blah, blah, blah. These banks, if anything, Druckenmiller recently has been going, there's dead bodies out there, people. There are dead bodies. We just have to find where the hell the dead bodies are. And I wouldn't be surprised. We have not heard anything about Central and South America. And historically, they are horrible. And usually they blow up. So, and the financial services sector blows up. So you can see number one and number two as the debt ratios are to Central and South American banks. So there's another foreign bank, right? So you go on and on. There's a Chilean bank. So you can see, I wouldn't be surprised if the dead bodies that Mr. Druckenmiller are talking about are in South America. There's another one. I mean, everybody what? Look at this Bank of Chile, right? I mean, so there's Deutsche Bank, right? German banks in big trouble. There's the Pac West that we were talking about there earlier. So where am I going with all this? Well, if you look at something like a JP Morgan, how bad is the situation for big money center US banks? Debt to equity at 1. I mean, it's not great, but it's nothing like those Central and South American banks. Can they service this debt? Like right now, they got 537 US dollars per cash per share on the books. They are sitting on a mountain of cash. They can service this debt, and they can also handle customer withdrawals. So that's not bad. Although I will say that is looking very emmy. So don't be surprised if there are some fireworks here. But let's go look at a Canadian bank. And this is where it gets scary. So TD Bank, and this is the most heavily shorted bank stock in the world. And look at this debt to equity, 3.94. That's like a goddamn South American bank. And this is all predicated on the Canadian real estate market never, ever going down. It's just going to constantly go up forever. It will always go up. Come on. I mean, this has got disaster written all over it. So there is a really good illustration for everybody why these banks are in the trouble that they are. 4 times debt to equity, that's ridiculous. And, they better have a bunch of cash on the books. They got $294 a share. But, if Alan down there, what the hell's his name? Chapat, it goes and, cranks interest rates up because inflation just won't go away. How much of this cash is just going to be chewed up just servicing this debt? And then what happens if people say, you know what, I don't want to keep my money at the bank because you're not paying me anything short-term interest rates. I'm going to move my own money over to Interactive Brokers. And in fact, I don't want to take the chance of having my money in these banks because the goddamn politicians have come out and said that, oh, you know what, we're just going to dip into people's savings accounts if there's a bank crisis. And we're going to, you people that have bank accounts, you're going to bail the banks out because the government's not going to. Is that going to give you incentive to keep money at the bank? I don't think so. And me as a Canadian, I've taken my money the hell out of these banks. There's no way I'm keeping my money in these banks. So you can see the writing's on the walls. It's as plain as day. So a little bit off topic today, but a very good tutorial for everybody as to why these banks are in as much trouble as they are. That is a big, ugly, nasty number there, folks. All right, back to our story. So as we sort of said, and the interesting thing here, of course, is that the Econs, if anything, with Canada's GDP, relatively okay. And, the numbers down in the States, they're not fall off a cliff. What bothers me, of course, is, we have looked at things like housing data and house inflation down in the States, and it's still very, very high, even though things like US mortgage rates are still ticking higher here. You put it all together, and of course, I've talked to you guys at length about this, so we definitely don't need to give you a tutorial on this. You should all know this. The market itself is looking for higher short-term interest rates. This hasn't changed at all. It is interesting to see how this has ticked up here, though, a bit. But this guy over here, there's no change here whatsoever, and I don't see how the Fed cannot raise rates heading into that with that image looking the way that it does. So, you can see, and this reminds me a lot of 2008, because through the spring and through the summer, there were a number of sort of problems that were developing. The big one was Bear Stearns back in 2008. And the through the whole summer, the question was Bear Stearns going to make it? Was Bear Stearns going to make it? And then all of a sudden, as we started heading into the fall, Bear Stearns started to tip over, and then it started a cascade. And then they went one institution after another, after another, after another. And frankly speaking, looking at all these banks, you might just see exactly the same thing. And like I said, I don't think the Fed has permission to start lowering interest rates just yet. So anyway, there's a fun story for you. I did find it interesting that over the weekend, I was musing about whether maybe we were having a megaphone top here in the stock market. Got a lot of pushback from people about this. They did not like my statement here about this potentially being a, where the hell did I, oh, this is crude. This being a megaphone top. No way, man. But interestingly enough, I think actually it is. So this was the image that we put out here, at least I did, over the weekend on Twitter, and of course, posting it in the site community lounge. And you can and actually, what's scary is this played out exactly as I predicted. You know, I don't like people getting into the prediction game. And of course, you know, if you're so smart, Brian, why didn't you short there and take the damn trade? But I do distinctly remember that as we were heading into the holiday weekend, I said that usually what happens is Wall Street bids the market up. Obviously, Friday, options expiry, they want as much money as possible for free. Remember, institutions write all the put options, so bid the market up, so all the puts expire worthless, yada, yada, yada. Then you have that funny holiday session on Monday where actually most of the banksters do the business. And the retail market, of course, is closed because it was a holiday in the States. So then the market comes back and literally it's just straight down. That's basically what's happened here. It's quite remarkable how violent this is. So we have come back to the 50% level. My hunch is that probably interesting how we have a BFF reference line here. Because usually what we do, and David actually is just so good at this. It's so cool watching TRIers. I would definitely call David a TRI OGers. He's like worked just diligently over the past, I don't know, 7 years at getting good at identifying megaphones, Adams and Eves, double bottoms, double tops, triple bottoms, triple tops. He's very, very good at it now. I had on here, of course, this is BFF, Brian's big fat butt favorite fib right there, 78.6. You could also draw a midpoint of this megaphone range here, and this probably should be our price target here in the near term. That's usually what happens. Also, too, candle body lows for trade location. There's a 2.618 that's floating out there that should probably be traded to. Wicks and tails like to be, and there's a whole bunch of trap bears in that tail, some trap bears in there. So we're probably going to dip down into these levels here, and then we'll see some sort of snapback, and then we'll find out whether this top's actually for real or not. But very interesting how that megaphone, I think actually that is a valid megaphone in my opinion. It's just working away, doing its thing. And what I find fascinating about this, of course, is because I've told you, I definitely think that crypto is a leading indicator in the market. And of course, if we go and look at crypto has had a bear megaphone working for quite a while now. And here is another. I mean, geez, take a short of this if you could, Chris. I don't know whether we've done a short of this before, but geez, this is such incredible learning material for everyone. So, you know, repeatedly, I have a rule in the education program that I've built and that I have all the instructors teach people that you cannot take a trade on a trend line break like this. If you do, you are just asking for trouble. Now, I'm not in the prediction business. I'm not going to say go and short that. All I'm going to simply say is if this is for real and the market is moving higher, then you have to get some sort of bullish market structure on the other side of this trend line. You just have to. And here, folks, is an excellent illustration of that. I mean, once again, I don't, how do we get these shorts? How do we get this message out on YouTube to the public. Brian, just stop swearing. But, this was an absolutely perfect analogy. And what's worse about this is they did all of this through the holiday weekend, where basically most of the retail market, they were away. This is the classic Wall Street line. And then we went after the stops. I mean, the market was working its way lower. We had bearish setups, bearish bots, the whole thing. And the market, they just saw it was a very illiquid market. I mean, you see crypto. Crypto is nothing like what it used to be a couple of years ago. And that's exactly what's supposed to happen this part of the cycle. The public's not interested. If anything, when the public is interested and they're all stupid excited about crypto, that's when you should get the hell out. But anyway, the point of the matter here is big rally. They ran all the stops, whole bunch of liquidity pools. And then once all the liquidity pools were drained, then boom, straight back down we go. And interesting enough, this is actually marching along that same sort of cadence as the US stock market. And like I said there a moment ago, I actually think that Bitcoin is actually a really good leading indicator here. I still feel comfortable that we're going to work our way up into this FOMC event here on the 14th. As well, too, we were talking, I think I mentioned it yesterday, but, we have a bunch of references on the site. There are a few sort of fundamental catalysts. There's a big catalyst for XRP coming up, I think, on the 10th of June. So all in this area, I think that there's justification for sort of like buy the rumor. And then once we hit that FOMC event, sell the news. And we dump. Now, maybe we can't even get up this high. I mean, this is a nasty failure here today. It's not really an outright sell signal. I mean, we have a 3-bar fractal that just fired. This actually, it's interesting. An old Top Step guy I used to work with years ago used to call this a gravestone doji. I don't think it is technically a gravestone doji, but it is a bearish chart pattern. So not a big surprise when we lost those lows. We dumped very quickly. Munch is, candle body lows or trade location. All these trap bears, they want to get released. So, it probably dips somewhere down into this area. My worry here, though, is that actually what we do is we just walk our way down the trend line. So we'll see what happens. Only time will tell. Yep. Okay. I don't know whether I gave you a half decent offering there today. I sure hope I did. I'll tell you, some of the stock ideas. Actually, I went and bought some more of this guy. This guy's in the pot industry, and also too a couple of restaurant chains in Canada. I suppose with the sickness kind of stuff finishing, maybe the restaurant industry will come back. Anyway, got filled on that guy. We'll spend some time in the after party going through some names that we reviewed last night in the Stock Pickers Club. Oh, I'm totally choked about this one. I had my bid. I've been barking about wanting to get long Intel for a while. And I had my bid working at, Brian's big fat fib right there, 2670. Look at the low that they put in here. I mean, is this planned by somebody? This is ridiculous. So the low is 2686. And now look at what they've done here on this damn stock. Jerks. So anyway, I got to be patient, disciplined, don't chase, blah, 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 blah. You know how it goes. But look at that. Intel up 4.5% on the day. Ay, caramba. Anyway, so we'll go in the after party and review some of the names that we've recently strapped on in the stock market. And some are doing good, some are doing not so good. Of course, everybody, you got to obey and respect your stops if you are taking sizable bets. And of course, if you're little old lading, then you're just nibbling away. And maybe I'll talk a little bit about some of the little old lady nibbles that I have working right now. I just told you a little bit about Intel there. Pissed me off. Maybe I'll talk a little bit about some of the stocks that I did buy. And maybe some crypto too. So, all right, why don't we leave it at that? I think Julian's going to be on tomorrow. We'll see what happens. Nothing's really changed on the higher time frames with regard to things like Bitcoin short setups and altcoin. If anything, I kind of warned you guys, maybe let's let these bullish dips play themselves out before we start getting uber bearish. Is that playing itself out? I can see not a hell of a lot of buying interest here. So slow and steady wins the race. We're still through this May-June window. Once we get on the other side of the end of June, then I think we can go back into party mode. And more importantly, right here in the short term now, it is the end of May. We actually have to start going into Fed mode. So we have basically 1.5 weeks left. And once we get to this window, I do fully expect the market to top out and we dump into the end of June, which is pretty typical. So just be forewarned, be ready for it. Okay, there's your offering for the day. PMA for the win. Slow and steady wins the race. Don't take no win nickels. Remember what your number one job is. Blah, 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 blah. Have yourselves a great day. All the best and bye for now.